Hello traders, how are you? Vladimir here from Traders Academy Club, and in this video I would like to talk about another bad mistake that traders do in trading. And as always, not just to mention the mistake, but also I would like to share with you my solution to that and what should be done and how should it be done properly. But before we dig deep in the subject of the mistake in this video, if you are new to this channel, first of all, welcome to our fantastic community. I would like to invite you to subscribe to the channel. Please follow the subscribe button below the video. And please remember to enable the notification so you know when a new content is available for you. As well, I would like to invite you to join us in our trading club, our trading family, and you can find the link below this video in the description or in the pinned comment inside the comment section. So what is the mistake I would like to talk about today? And by the way, as I mentioned already in my previous videos, I am my purpose in this video is to point a mistake traders do, which I think it's a problem in trading journey, and to offer a solution. You could agree with me, you could completely disagree with me. It's totally acceptable and totally fine. But I would like to ask your assistance and help to other traders that will watch this video. If you have any great suggestion, any other advice from your personal experience, please share in the comment section, and hopefully it would be helpful to the other traders that will watch this video. So the mistake I want to talk about today, it's from my point of view, a bad mistake in trading, and that's relying on one time frame only. Okay, and I will explain why I think it's a mistake, and I will explain why what it is the right solution in that case from my point of view. And also, by the way, this is one of the videos I create in this playlist of the mistakes and solutions for trading. And so you can find the playlist available for you here and in the channel. This video is part of this playlist. So why do I think it is a mistake the traders do, trading only one time frame? Look, like anything in life, when you try to make a decision, you are not making a decision only by one available factor. You want multi factors available for you to make your decision easy. Like, for example, if you want to send your kid to a school, you don't send him to a school just because one of his friends is there, right? You want to make sure the school is in an appropriate level, it's nearby your place of living, the hours are there for you, the teacher is good, etc., 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 right? If you buy a property, you're not buying a property just because you saw a nice neighbor in the next door. You are going to buy a property because of multi-factors. You are going to check the neighborhood around, the transportation, the ease to access with driving, the tax, the potential reward in several years, etc., 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 right? So my point here, you can't really do any decision just by one factor, right? It's like, for example, it's a cold day outside, but you're looking out of the window and like, oh, there is a 1 minute of a sun. It's hot. Let's just wear a t-shirt and go outside. It doesn't work like that. You have to look for more details around before you actually do your step. Same in trading, checking only like 5 minutes time frame or 15 minutes time frame and say, oh, there is a trend, let's ride it. From my point of view, it's a mistake, because it could be a very, very temporary market reaction because of whatever the reason is, like news or just like expectation of some event to take place, or just rumors, or just manipulation and speculation that these things happen. Many times when you open the chart, like, whoa, everything flies, and the next 15 minutes or 1 hour, everything crashes. So trying to make a decision just thanks to one time frame would, in many cases, I wouldn't say most, but maybe even most, but in at least in many cases, it would lead to wrong decisions. What is the advantage of multi-time frame work and multi-time frame analysis? So every time frame represents different flow of money. What you see on 15 minutes time frame, for example, represents what happened during the last 1, 2, 10 hours in a bigger picture, right? When you are observing the 1 hour chart, you can see what happened in the last few days. When you are looking 4 hour chart, you can see a few weeks, and daily you can see even further. So when you are able to look in different time frames and get the picture out of there, right? So if there is a clear trend, for example, on the daily chart, and there is a clear trend without any obstacles on the way on the 4 hour chart, and you got a recent pullback, then on the lower time frame you can look to join that and ride it. That's where your odds, and I say odds because we are working with numbers here, it's all about statistics, right? Your odds would be increased, and in the business of trading, that's huge advantage you can have over the other competitors, other traders, okay? Because if you think about it, okay, straightforward, everybody is in this business to do the same, take someone else's money, okay? If everybody is doing just something the same, then where this money would come from, right? So you need to try to understand here that there is a reason why majority of traders, especially the beginners, lose money, because they are rushing into a decision, and they make not a complete decision. Not a complete decision. Even a complete decision cannot guarantee a winner, but it could increase your probabilities, your odds, much higher and make it dramatically bigger. So in business of trading, that's all about the numbers. Your starting point of a trade, does it have a low chance? Okay. And if you look only on 15 minutes, for example, and ignoring what happens on a day and 4 hour, your chances are lower, rather than you are analyzing the bigger picture and working accordingly and timing your opportunity according to a multi-time frame analysis. So you basically put different factors. Oh, okay, so bigger picture is bullish. Now on the medium picture, for example, the medium picture is time frame, right? It's also bullish, and now I have a correction. The correction comes to a significant trend line, support, key volume level, whatever, right? But now you have few factors in your favor, and then on the lower time frame you can time your entry, for example, and to ride it. Okay, again, just I'm not showing a strategy here, I'm pointing out a mistake traders do and the solution for that. So the solution to that, as I said, and as I hint, from my point of view, it's very straightforward. And the solution here is multi-time frame analysis. Now, what does that mean, multi-time frame analysis, and how to do it properly? There are endless amount of ways to do that. Elliott wave cycles like I do, multi-time frame divergences like I also work with, support and resistances, trend lines, Fibonacci's, etc., 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 etc. Okay, there are many other ways to read the market, and that's totally fine. What makes sense to you and works for you in your back test and your practice period, that's the one you should work with and follow. Now, the very important thing here is try to understand and synchronize the multi-time frame in the same direction. So if daily it was running, but now is hitting several days in a row and a key rejection level, and you go down to the 4 hour chart and there are potential reversal signs, then it doesn't make sense to buy it on the 1 hour or even 15 minutes, right? It doesn't make sense to buy against a resistance or key rejection level. But if you are riding a trend and there are no significant obstacles on the way, you got a pullback, again, everything looks in a trend, and on the lower time frame, you can look and join this trend. Okay, this is the advantage you get by working with a multi-time frame. Okay, now I myself work with cycles and multi-time frame divergence. That's exactly also what I teach in Traders Academy Club, day after day, week after week. And I invite you to join us in Traders Academy Club and see how it's done, how I do that. I don't say this is the best way. I say this is the way I work years by years right now, and that's what I do on a daily basis inside the club. Okay, so you choose your method of the multi-time frame analysis and follow that. Trying to read a chart only by closing your eyes to a very specific thing and try to make a big conclusion out of it, and trading decision is a big conclusion. From my point of view, it's nothing more than a mistake. So let me know, what do you think about it? Okay, are you using multi-time frame? Are you sticking only to one time frame? How does it work for you? If you have any significant, valuable, helpful suggestion to other traders, please share below in the comments. And again, the purpose of this video is to open the eyes for those who suffer from this mistake, and hopefully to give them a proper solution. So thanks again for your time watching this video. I really encourage you to watch the playlist I created here, the mistakes traders do in trading. This is one of these videos, of course, out of many we have in a playlist. I wish you wonderful trading. And once again, I would like to invite you to join us in our trading family, the Traders Academy Club, and the links are below the video in the description and the pinned comment. Thanks for your time. Stay safe, be well, all the best, and good trading.